Welcome to the London Outlook for Tuesday, the 9th of January 2024. Starting off with the economic calendar, as you can see for today, there are no high risk news events or high impact red folder news events, and thus there are no news related considerations to consider for our trading today. Jumping straight into the charts, in terms of the daily chart, what we can see is that today is the potential fifth consecutive bullish day. In my testing, this is highly unlikely to continue as a bullish day, and we'll actually get a bearish day to somewhat offset the momentum from the past couple of days. I'll quickly just take off the inside bar alert, and what we can see is we've got 4 bullish close candles, and thus the likelihood of this being another bullish candle is less than 10%. Then moving on to the 4-hour chart. In terms of market structure, nothing much has changed. We continue in this confirmed bullish market structure trend. The pullback phase was validated last week, or in the previous year actually, and we've got this 4H pullback phase OB to continue to short from. However, there's a couple of things to keep in mind. One being that everything from the pro-trend lag has already been mitigated, which then means that in order to take longs, we need this 4H OB to be body broken to then validate the 4H pro-trend primary leg right here. That hasn't happened right as yet. And then what we can see what is happening right now is that yesterday we developed the secondary leg. The secondary leg is still valid. However, we did have this pushback back to the upside, and it brings into question a number of considerations which I'll go into now in terms of the 15 and 5 minute. In terms of the 15 minute, we didn't yet have validation of the secondary leg because there is no actual 15 minute OB to validate the leg. Also, in terms of, I guess the point to make is that we're actually trading counter trend, and since there's no liquidity in this 15 minute leg, in terms of the 15 minute, there isn't actually any validation to continue trading. Then moving on to the 5 minute, I think what is important to highlight here is actually that we've got IRL in the 5 minute time frame, which starts off there and essentially continues all the way up. However, again on this time frame, there's a number of considerations. Yesterday, we did indeed validate this secondary leg when we broke this chock level right here. However, coming into today, looking at the previous day high and low, we've essentially got this leg, and it's a little bit tough to actually align this leg with the secondary leg, because the secondary leg is to the downside in the previous low and high of the day because of the bullish closure, and the fact that it's an inside bar makes it tough to actually support any Fibonacci's as such. Also, because we're not directly trading from this 4H or this 5 minute OP that is part of the secondary leg, it's almost as if we validating a tertiary leg which is not valid in terms of our trading plan, which then brings us into our actual considerations for trading today. One being the fact that we can short only because of the daily consecutive bias, which I talked about in the beginning. The other being that using this existing secondary leg doesn't allow for FIB to be anchored to the secondary leg. Essentially, what I was saying is if we anchor our FIB like this, then it doesn't make sense because it's not associated directly to the secondary leg, and more so we kind of establishing a new leg. Given this, our options to actually short is one for this secondary leg to be reset, or for the secondary leg to be extended at this point. Ideally, and what makes the most sense, is for the secondary leg to actually be reset right here without actually 4H candle body breaking this level, and then we have actually some scope to continue shorting. If price comes all the way down here and continues to extend the leg, chances are that we'll already have moved at least 70 to 80% of ADR. If not, well, in this case we would have moved the entire ADR range, which, sorry, what I mean by ADR is the daily range, which would pretty much invalidate trading for today, and we'd probably wait for tomorrow because we can't longs either. So yeah, that's essentially the London outlook. Perhaps to summarize, we can only short, and we're waiting for the secondary leg to be reset either in Frankfurt or London, and then we'll look for a trade from that point onwards. The other factor to remember to consider is that we need to be positioned within the previous high of the high or low of the day. Well, in this case, since we want to short, we want to be below the previous high of the day, which would be this level right here. And then we can consider shorting, given that we'll be creating a new secondary leg. Our fib will be anchored to the current day high and the extreme. Cool, so that's the end of the outlook, and we'll chat again for the New York outlook.